Joining me now is Jeff Kilburg, CEO at KKM Financial and a CNBC contributor and a Chicago Irish Catholic. So this is an exciting hour, Jeff, for us both to be sitting here. Incredible.
It's wonderful to share with you.
Yeah, so anyway, all of that aside, do tell, what made you immediately look at that 8% drop in Google on these Eddie Q headlines and think that's not warranted?
Google is the search king. And when you talk about what Mark just laid out, being that diversified search king with Waymo, with YouTube, with all the moving parts and the cash on hand, I really think there's an opportunity to buy it here because if you think about the Mag 7 in general, we saw a massive devaluation. We talked about how vulnerable it was for many quarters, Kelly. And now all of a sudden Google at 150, that was like an alarm. That's an opportunity to own, to another acronym for you, QGARP. Quality growth at a reasonable price. This is a growth company. They're going to figure out, they're going to defend their space with all the different AI out there. So I bought Google. We actually own the Essential 40. This is an essential stock name. Yes, it's been beaten up, but it had two dramatic years, Kelly. It was up 60% in 2023 and another 40% in 2024.
Wow. So what in the rest of the Mag 7, what do you, we had talked a lot about NVIDIA last summer. To your credit, you were constantly calling it out as looking a little bit overdone. Remind me now, you think you were waiting to pounce, is that right? Or where are you on that one and the others?
So we've been selective on coming in. And Tesla, we bought down at that 220 level. NVIDIA, we were able to scoop up back in the 90s. And it didn't seem very good when we were buying these. But this was, we talked about this optimism. The worst case scenario is being priced in. Whatever debacle was laid out in that rose garden, we saw the worst case scenario. So now as you're seeing some of the pieces being picked back up or rebuilding that mosaic, there's an opportunity to own some of these Mag 7 after being so over-concentrated. Think about the 500 ETFs that own NVIDIA.
Yeah,
so it was great to see that revaluation. There's an opportunity to own them.
Is Apple a different story?
Apple is, and it's going to be interesting to see how Apple kind of retains. But Apple is not really the growth story it used to be, but it's an ecosystem. I'm in the ecosystem, right?
I mean, it's a buyback juggernaut. I mean, they've bought back so much stock. It boggles the mind.
And Kelly, you bring up a great point, and that's the one thing, I think, overarching theme of Q1. We saw those earnings estimates really come down. And what happened? It's been about over 10% year-over-year growth, better than expected. But the overarching theme from all these corporations that said we're so uncertain due to trade tariffs, what have they been doing? Buying back their own stock. So those buybacks continue to be winning the sales. Apple's a great name. And I think when you think about the Amazons, they've all been brought down to a valuable entry point. Most people own these names, but now there's an opportunity to be really selective. But I do think there's opportunity in Google.
I wonder, I mean, we were talking about this yesterday in Washington, but could there be an increased stock buyback tax as part of what will make this one big budget bill kind of help balance this? I mean, it's not off the table. Corporate America never took that much of I would say even of an effect to the first buyback tax. So whether this went up to any significant level, I don't know. But for now, they all continue their buybacks. And there's just, I guess, a staples aspect to owning the Mag 7. So for you, valuations is not, the concern that it was, maybe 3 or 6 months ago?
It was. I mean, late Q4, Q1, when you saw those 7 names, which were representing over 35% of the S&P 500, or globally it was being over-owned, now it's come and reset. We still want to be particular on our exposure, if it's market cap or equal weighted, but there is an opportunity to own the Mag 7. If we see the VIX continue to move lower, this has been a historic move lower in volatility. We talked about 2 days after the Rose Garden debacle, it was the most put options ever bought.
Really?
4 weeks later, the second most historic deterioration in volatility. We saw a 50% haircut in volatility. The VIX is about to tuck under 20.
So is it over? Is it all behind us now?
It's not. It's not over. It's not going to be a straight line. But right here, technically, at the S&P 500 5750 level, that is going to put a lot of the shorts underinvested at risk. And you can see an exaggerated move up to 6,000.
Our guest yesterday, Binky Chadha from Deutsche, I'm sure you know him, said he thinks we're going to be in a range of 46 to 5,600 this year. So we were already at the high end of it yesterday. We're above it today. So it just sounds like you view kind of the potential here a little bit differently.
I saw the low getting put in when there was panic. When you saw the VIX go over 60, we talk about how bad it feels to buy stocks when the VIX is above 60. But historically speaking, it's been a good remedy and a good formula. So right here, right now, I think we're going to continue to see higher lows. But I think the bears are a little bit in jeopardy if we do get above this 5750. They're going to go and test 5950, 6,000, and that's where you're going to see a little bit of volatility. Because remember, Kelly, volatility takes markets up just like it takes markets down.
That's good.